only to members. The investors at large will get it as a public information in the website of the company. The board's report to contain detailed reasons for the revision. Okay, so these two sections have been introduced. I don't see any logic behind them except one is Satyam, the first one. Second is already many companies are revising their accounts based on the Ministry of Corporate Affairs circular. There has been a representation from the chambers that the only reason we revise should not be taxing statute. There are so many other reasons also why we want to revise the accounts. So bring it into the statute. So that circular issued by Ministry of Corporate Affairs has now been made into a statute, is what I feel. Moving on. That this is something that you may want to talk about. The consolidated financial statements of all the subsidiaries will be usually prepared and shall also be laid before the annual general meeting. The subsidiary shall for this purpose requirement include associate company and joint venture. Earlier the Companies Act never mandated consolidation, but now they say consolidated financial statements should be given. It is AS 21 which was operating here, and we were consolidating based on the accounting standard, whereas now the statute itself mandates that you have to consolidate the accounts of the holding company, and not only the holding and the subsidiary, but also associate company and joint venture. Now, as already, or maybe when Mr. Mohan Kumar talks, he'll tell you, the associate company means 20%, in which case that company also should be consolidated. It's going to become a nightmare for audit, because we have to find out what are all the associated companies, and then along with the parent umbrella holding company, we have to consolidate all this. It's 210, 211, no consolidation. I'll explain. 210, 211 was a very simple concept where the accounts of the subsidiaries were to be presented annexed to the balance sheet or attached to the balance sheet of the holding company. Now that provision has been deleted. That is now deleted. You need not give the balance sheet and P&L account of all the subsidiaries along with the holding company's balance sheet, thereby making the annual report bulky. Okay. Today all you need to do is consolidate. The only problem here is associate company and joint venture. How do I consolidate with a joint venture? Because where my stake will be there, his stake also will be there. He is not a minority interest there. For all you know, I may be a minority interest there. It's like the dog wagging the tail wagging the dog. Okay. But that means there will be two consolidations. Both of them will have to consolidate now and take it. Anyway, enjoy. That's all I can say. My accounting fraternity, we will get additional, what shall I say, job work or some sort of a special assignment for consulting, because the auditors would not be able to do it. Sir, I am going to ask a very fundamental question. Consolidated. Agreed. Correct. But I am going to ask an honest question. Who was reading AS 21 consolidated? Was any shareholder reading AS 21? In fact, I have had one or two cases in the investor meetings where they will bring the balance sheet. They will ask me a doubt based on the parent company. See, their doubt will be on the parent company, but there will be a figure which they will be showing it in the consolidated balance sheet. என்ன சார் நீங்க இவ்வளவுதான் இருக்கு நீங்க ரிசர்வ்ஸ், ஆனா அவ்வளவு ரிசர்வ்ஸ் இருக்கு பாருங்க அந்த கம்பெனிக்கு. சார் நல்லா பாருங்க, நீங்க பாக்குறது வந்து consolidated balance sheet. Okay, because there the reserves will be. The problem is many shareholders don't know the difference between the parent balance sheet itself and the consolidated balance sheet. But see, that way it's a bigger story, sir. According to me, the accounts, I don't know, about around 1999, I had the opportunity to go through the balance sheet of Bofors Limited. Because at that time, Bofors was a major issue. So we were struggling, we were trying to get the balance sheet of Bofors. And for your information, the Bofors balance sheet, see, Bofors has other negative connotations as far as India is concerned. The Swedish company, Bofors, their balance sheet was in English. There is a Swedish balance sheet and an English translation. We got the English translation. They've got a statement of accounts. It's not a, they've got a running verbatim report. For example, the board of directors write like this. Your company began the year with a balance of so much. During the year, we made a profit of so much. Thereby, our reserves have gone up by so much. And our turnover for the year was so much, which is more than so much of the earlier turnover. Like that. So, this is the type of information that investor would like to have. In India, we have not mandated that. Even now, see, even the chairman's speech or the board of directors speech, is so mechanical that the shareholder really does not want to read. Though of course a little bit of perusal of the director's report, he can get a little more information. But yes, this would definitely mean I think, but the annual report should hopefully become less bulky is the point. Moving on. The requirement of attaching the balance sheet P&L account of the subsidiary companies has been dispensed with, as I already mentioned to you. This may be a mixed bag where, as you rightly say, there may be a loss, but again, there may be small chota subsidiaries. We used to have everything consolidated. Consolidated balance sheet for associates and complete subsidiary, associate and joint venture. It seems to throw a little bit of a confusion for the accounts. The name has been changed. Earlier, the name was NACAS, National Advisory Committee on Accounting Standards. This has been changed to National Financial Reporting Authority. The word authority is now putting a little fear in the mind of especially the chartered accountant fraternity. The reason it's putting is that the word authority means they get some power. What shall I say? The NFRA now, NFRA, has now been made into a powerful body where NFRA has been given powers to investigate suo moto or on reference by CG into matters of professional misconduct committed by any member of a firm. So now they have got, but seriously, this is again a knee-jerk reaction to Satyam. They want to be sure that they have the power to investigate. Earlier they did not have the power to investigate. So they were relying. Now they can investigate into the misconduct, professional misconduct committed by any member or firm. Today, we are already facing this pressure in the Institute of Chartered Accountants of India, where the infra, the NACAS, see the Ministry of Corporate Affairs is already sitting in our disciplinary committee. So the disciplinary committee today in the Chartered Accountants Institute is not purely members. It is now controlled by the ministry. The reason is the ministry wants to be sure that the disciplinary committee is functioning accordingly. I don't think that is so in the Institute of Company Secretaries of India, where still the body is the independent body. I have a very strong view on this. Recently, when myself and Mr. Mohan Kumar spoke at the Institute of Cost Accountants of India, I held very extreme view on this. I still hold very extreme view on this, and it's something that we need to fight, which is what, at that time they were also saying, the cost accountants are also saying, we were fighting strongly against it. When we were fighting, you guys did not join at that time, is the accusation that they gave. And believe me, what is applicable to both of us now will become applicable to you in a short while. Yeah. Very happy. Very happy, madam. My only complaint is professional misconduct by a member of an Institute of Chartered Accountants of India. Is the government qualified to go into it? How? Ultimately, 3 of my peers have to sit in judgment over me. Am I correct or not? See, take a simple parallel, you will appreciate this. Medical counsel. If a doctor has committed professional misconduct, who can verify it? I want an honest answer from all of you. Lawyer, auditor. Only another medical professional of an equivalent knowledge and qualification. Nobody less than that can also verify. See, you can't put a 10-year-old practicing medical professional into the committee, and a senior 60-year-old doctor's treatment cannot be questioned by him merely because the patient does. I mean, this is just my view. I held very strong views on this. Exactly. In which case, in other words, you are creating a new governmental body, in which case, in which again, who will sit? Only chartered accountants can sit. So, am I correct or not? So, let us say that I have 3 chartered accountants and 2 bureaucrats. The 2 bureaucrats have no role to play there, except to monitor whether it's all happening in a transparent way. That's why I am saying you have to be careful, because see, ultimately the 2 bureaucrats, I'm not saying that they are not competent. I'm saying, how can they be competent? Then what they should do, they should go through the CA course. Yeah. It's being done like that. The monitoring body. Thereby what happens? Too much, it's a big problem, sir. I can't share everything with you. There are a lot of issues there which I cannot share with you in public. But these issues are making it even more nefarious. And that's only going to give an opportunity for some XYZ to come and play a sort of a middleman role in the entire disciplinary committee. Whereas, let me put it in a different perspective for all of you. Who should be concerned about quality and ethics in the profession? Who should be most concerned? The existing members. So who better to govern this? See, it's going to the principle of the thing. That's why I may sound a little naive when I make this comment. Sometimes when I talk like this, people who are supporting the infra view, they don't understand the basis on which I am making this comment. I am not against ministry governing. For example, suppose there is a criminal misconduct on the part of a member. Suppose the member has defalcated the money of the client. Believe me, the next thing you have to do is to give it to the police for a police complaint. I am not saying the members of the institute will take care of that also. But I am saying when the issue is whether the audit was completed in accordance with the accepted practice or not, there I think no other external body can play a thing. But if there's, see, that's why the professional misconduct is clearly distinguished, which involves criminal acts and which is purely professional misconduct on the part of the member. Where it involves a criminal act, I am not trying to protect my member. Even if even the audit was considered even if criminal intention is proved, then directly you can take it to the High Court, you can take it to the police prosecution, and as a consequence, he can be debarred. I am not protecting anybody here who is criminal. But when see what happens, many members, they genuinely perform the audit. But subsequently, the banks or other bodies, they come out with all sorts of complaints in order to protect themselves. And in that process, it becomes a real nuisance. Anyway, I may be a lone voice raised against this whole concept because the majority of the members of the Institute of Chartered Accountants of India have no problem. They are happy with the system by which the ministry would be there to monitor them. This is what is a really crying shame. And I am making this noise everywhere, including the Institute of Chartered Accountants of India. Even the Institute of Chartered Accountants of India members are feeling, no, it's okay, Srikanth, let us have infra to monitor us. Warning. Correct. But then it could result in certain problems, which I cannot talk about here. Okay? You understand what I am trying to say. Because you are talking, on the one hand, we are talking about this. On the other hand, we are also very clear that the government is a corrupt mechanism. We are all very open. When say, forget infra. Let's talk about some other ministry. Immediately, you will be very open in your comment that it is a corrupt ministry. So that is the problem that we are facing here. Because somewhere down the line, we three institutes are pure. We should maintain our purity by our integrity and honesty. See, this is coming from a different place. This is not coming from I'm not trying to say no to the ministry, is what I'm saying. So, this is my view and not the views of the Institute of Chartered Accountants of India or the Southern India Regional Council of the Institute. Okay. Now, sometimes, the accounts have also to be presented. The director's report of every company except for one-person company shall provide for various types of additional information. In addition to this, like the meetings of the board, company's policy on director's appointment, all this has to be done, and explanations or reservations for any adverse remark, etc. As far as director's report, I just included it here. It is not part of accounts, nor is the report of the auditor extending to the director's report. Moving on. The director's responsibility statement shall include an additional statement related to compliance of all applicable laws. And in case of listed companies, it shall also include a statement related to internal finance of the company. Friends, I want to stress here on only one word. All applicable laws. What? No, you should know it. Because ignorantia juris, none excuse that. So who's wrong? This is your problem, sir. As the company secretary, you have homework now. What you have to do? You have to take down the entire list of laws in this country. Okay? And then find out which laws are applicable to you. Okay? Including the shops. And of course, those and all you would have already verified. Motor Vehicles Act also may be applicable to you. Okay? Suppose one of the cars that you're in your company, they are violating the Motor Vehicles Act. You have to give a Correct. But what they actually mean here is not all the laws, but those laws that are impinging on the industry. Of course, for example, in case you are dealing with a particular type of industry, it has certain regulatory laws. Those laws have to be, whether those laws are complied with. That is the intention. But all applicable laws is throwing up a lot of, because clause 49 is only for listed companies. Here this is going to become applicable to all companies and including small companies. Okay. So we have to be careful about this. My suggestion is somebody should come out with an encyclopedia of laws. What are all the laws in India? That's why I used to jocularly remark that just by standing here and talking to you, I may be violating some law. God only knows. Okay. There may be some law that says you can't wear a black shirt and a pink tie, black coat and a pink tie in this country. We do not know. If there is no such law, then they'll make the law. That's all. As simple as that. Okay. Yeah. Just can I have again? Yeah. The benefit given to private companies under the Companies Act 1956 to file their balance sheet and P&L account separately has been withdrawn. This means now the P&L account of private companies will be available for public view. I don't know whether that is a good or bad, but it is now available. Okay, agreed. But I think this must be a unfortunate, but they are intentionally doing it. They want the private companies also to be more. After all, it is not as if the private companies are protected by any. It's just that they are having certain benefits in terms of management control. But otherwise, there's nothing wrong in their accounts being seen. Nothing. Maybe the rules are as maybe, but no, here, no. All companies have to file their P&L and balance sheet. One of the reasons why earlier private companies were protected was because people will not have confidential information about the profitability. But today's competitive world, what is wrong in having that information is the point. Many cases, the private company may not want to show its P&L because of the result. Therefore, they may. But otherwise, sometimes, for example, for a long time, Hyundai Motors was a private limited. It was HMIPL, Hyundai Motors India Private Limited. Subsequently, because of the sheer size and because they wanted to get ECB into India, they converted themselves into, about 10 years ago, they converted into what is now called HMIL, Hyundai Motors India Limited, which is now a limited company. Till then, they were not filing their P&L account with the ROC. Rather, you cannot see it. They are filing it, but you could not see it. That's the point. I just thought, since I was told to talk about CSR, the CSR provisions are fairly simple. The big, shall we say, furor has been created. A lot of people are talking about this. They are talking about. I have time till 3:15, I think, right? Can I? Another 10-15 minutes. No problem. That's all. Almost over. We are getting to the fag end of this. See, there is a big furor today about compulsory CSR now. Believe me, it is not compulsory CSR. They have prescribed a class of companies. They have got a filtering net. They have got 3 filters. They say, asking the company, is your net worth, are you having a net worth of rupees 500 crore or more? That is share capital plus free reserves, totaling, other than revaluation reserve and including share premium account, will it be total equal to 5 crores and above? You are in. Next, is your turnover rupees 1000 crore or more? You are in. So these 2 categories, 500 crore net worth, 1000 crore turnover, very few companies only will be affected by this provision. But as Mohan Kumar also told the other day, suddenly they have opened up and said net profit of rupees 5 crores or more. Because so many companies are going to come into this category of. But then what happens if you are having this? Nothing happens. The company should form a CSR committee. That's all. These category of companies should form what is known as a CSR committee, and the CSR committee should consist of 3 or more directors, out of which at least 1 director should be an independent director. The CSR committee will advise the management on the type of CSR expenditure that should be incurred by this company. They will try to